Assalamualaikum and hi. Right now we are going to present on financial issue which are the Russian invasion of Ukraine and the risk of stagflation for the subject issues and ethics in finance. Let me start with an introduction. Russian invasion of Ukraine poses the greatest threat to peace and security in Europe and lead to risk of stagflation. Stagflation is defined by slow economic development and relatively high unemployment or economic stagnation, both of which are accompanied by rising price or inflation. The conflict in Ukraine is not only taking a human toll and wreaking havoc on the economy of the region, but it is also having a significant impact on financial market, the price of commodities and supply chain around the world. And price fluctuation will have an effect on market all over the world. The war delivered a blow to both inflation and economic activity in many countries, which occurred at a time when inflationary pressure were already at an all-time high.
Next, I am going to explain on the effect of the Russian invasion of Ukraine. The first one is it is lead to the supply chain disruption. Both Russia and Ukraine countries are important suppliers of raw commodities for the world economy. Beyond uncertainty, it creates barriers in the market and disrupting the movement of commodities. According to the data in the report written by Dun & Bradstreet, there are at least 374,000 businesses worldwide rely on Russian suppliers, and at least 241,000 businesses across the world depend on Ukrainian suppliers. Due to the war, the manufacturers have left Ukraine and the number of those remaining active is decreasing. The manufacturers and company rely on their alternative suppliers to fill resource gaps in their supply chain for the short term. Besides, the problem arises in transportation and logistics industries in both countries due to the war crisis also affect the global supply chain. The flight cancellations, higher pressure on cargo capacity because of reroutings, the closure of Ukrainian ports, the banishment of Russian ships from UK ports, and the suspension of Russian cargo bookings by the largest shipping companies worldwide are the examples of the problem arises due to the Russian invasion of Ukraine. Delivery delays, freight expenses and production costs are all rising. Furthermore, the military conflict and sanctions on Russia also impact the global supply of those commodities exported from Russia and Ukraine. The interconnectedness of economies and businesses has both exacerbated the growing supply chain crisis. The demand from manufacturers keeps increasing, but the countries cannot supply it, which makes the supply chain disruption and create shortage. This supply chain disruption will be resulting the price to increase and lead to the higher inflation. This situation is worrying for the country as high inflation combines with other factors such as slow economic growth and high unemployment will risk creating stagflation.
Assalamualaikum. So now we move to the effect of war in Ukraine towards commodity price. The commodity markets have been badly shaken by the war in Ukraine. So as we know, the price is facing price shock after the COVID-19 pandemic. This is because the prices for commodities have drastically increased in short of time span. So we can see that the price already increased because of commodities market constraint of post-pandemic. But then after the war, according to recent World Bank analysis, the war in Ukraine has caused the biggest shock to commodity prices since 1973 oil crisis. But then pushing up prices for upcoming years. And in the end of March 2022, energy increased by 448%, while food and fertilizer prices rose by 84% and 222% respectively. So here we can see the forecasted prices before the war and after the war. The most sustained inflation is foreseen in fertilizer prices, which has 82% differences between the pre-war and the latest forecast. So this fertilizer hit hard by the rise in natural gas price and because of the export ban by Russia, the world's largest fertilizer exporter. Before the crisis occurred, the price had been predicted to rise only 7% this year, but now it is predicted to increase 69%. Russia and Ukraine is leading for the world's largest grain market. Before the war, World Bank forecasted that the food price would decrease by 2% in 2022, but now prices are expected to rise 23% and the food price in 2024 are now expected to be 15% higher than previous prediction. The beginning of the conflict, export restrictions have been enforced by the Egypt, Indonesia and Samoa. Russia prohibit the export of wheat and barley, which about 10% and 12% of global export. In the mid-Jill, Vice President of World Bank claimed that a rise in export restriction as countries tried to secure their own supplies of essential commodities aggravated the price shock. This only lead to more unstable price and bad inflation. Besides, these changes have started to raise the risk of stagflation, which most of the economists and us are feared for.
Next, we move to the recommendation. In order to prevent the risk of stagflation, the government needs to control the inflation first. The traditional expansionary policy will lead to a permanently increasing inflation rate. The bank must aim to stabilize prices to prevent inflation from spinning out of control. The free market would allocate labor to its most advantageous users if the government deregulated the economy. Most neoclassical or Astorian's view of stagflations, such as those of economist Frederick Hayek, are similar to Friedman's. Common recommendations such as the ending of expansionary monetary policy and allowing prices to adjust on the free market. This is because monetary policy cannot solve both inflation and recessions at the same time. Reducing the economy's reliance on oil is one way to make it less susceptible to stagflation. The rise in the price of food and oil must be addressed by the government. It is essential to boost the supply of key food and energy commodities. Stagflation is mostly caused by rising oil costs. Supply-side policy to boost productivity are the only real solution, as they allow for higher growth without inflation. Modern-day Keynesian economists such as Paul Krugman argue that stagflation can be understood through supply shock. A supply shock is an unexpected event that changes the supply of a product or commodity, resulting in a sudden change in price. The government must take action to address the supply shock without causing unemployment to rise swiftly.
Right now, I will continue on three main channels of market mechanism that can be applied by countries in response to price shock, which are first, demand reduction. It has been demonstrated through this channel the global oil demand fell by 11% between 1979 and 1983, and it decreased by nearly 20% in advanced economy. The worldwide economic downturn in 1982 and the decrement of consumers' oil consumption were the factors that lead to the reduction. For example, US citizens are more likely prefer to buy Japanese automobiles because of their fuel efficiency rather than in their own locality. By increased energy efficiency and switching to other fuels, underlying demand growth was permanently reduced. Secondly, substitution. The share of crude oil in energy consumption in OECD countries declined by 7% in the 5 years after the 1979 oil price shock. This was due to the shift away from oil-powered electricity power stations toward nuclear and coal. On the production side in agriculture, substitution has been common. Farmers are encouraged to cultivate soybeans rather than other crops like wheat, since soybean prices are high. Thirdly, supply response, new sources of production. High oil price in 1970s encouraged the growth of oil production from high-cost sources in the United Kingdom and Norway. Other fuels like coal were also generated more. In 2000s, high and stable prices encouraged the development of alternative supplies of crude oil, including shale oil from United States. High prices for food in 1970s led to new supplies coming from South America, especially Argentina and Brazil. In response to the price shock, it can be said that higher inflation rooted from higher oil price, and countries may apply those proof channels as the alternative to better reduce the inflation rate that may not affect the unemployment heavily. Next, price limits or privatization may be implemented if the price of oil is a major contributor to out-of-control pricing. If higher salaries are held responsible for inflation, the government may set a cap on wage growth. Overall, the risk of stagflation can be reduced or overcome through this way, and our economy will be back tightened with great economic growth, low inflation and unemployment.
As a conclusion, because of an increase in consumer demand and significant supply chain challenges that have prompted price spike, Some analysts are concerned that Europe may experience stagflation in 2022. This is because of this combination of these two factors. Next, stagflation has a direct impact on affordability, which makes it harder for many people, especially those who are unemployed, to meet their fundamental needs. The economic implication will mostly be felt throughout the rest of the world as a result of an increase in the price commodities, which will contribute to the inflationary pressure that are already present. As is customary, when price of commodities surge, countries who are net importer of oil and food products will be hit particularly hard. If stagflation continue for an extended period of time, it has the potential to bring about rising GDP reduction, which will ultimately bring about a recession. I think that's all from us. Thank you and Assalamualaikum.